The information below was extracted from the books of Trx traders whose financial year ends 30 June every year. The balance on the 1st of July 2016 was $1,000 million for the provision for doubtful debts. The company has decided to maintain a provision for doubtful debts at 4% of the debtors at a balance sheet date. The remaining debtors at 30 June 2017 was $30,000 million, while the remaining debtors at 30 June 2018 was $22,000 Namibian dollars. Required is to open the provision for doubtful debts account as it is appeared in the books of Trx traders for the 2 years ended 30 June 2017 and 30 June 2018. Now I know this is a lot of information, but let's try to highlight the main points that you need to focus on. Well, firstly, you need to focus on the 4% which the company has decided to provide doubtful debts at. And then the remaining debtors for 30 June 2017 was $30,000 and 30 June 2018 was $22,000. So we see we need to open the provision for doubtful debts account for 2 years, 2017 and 2018. Now let's move on to our ledger. We will enter our opening balance as stated in the example. Now where does this opening balance come from? It comes from last year's ending balance. So the previous financial year's ending balance will be the current financial year's opening balance. So we'll put this on the credit side. Now for 2017, we need to calculate what is 4% of 30,000, and that will be 1,200 Namibian dollars. So now back to the ledger again. We will enter $200 on the credit side of our provision for doubtful debts account. Why? Because the 1,200 we calculated and our provision for doubtful debts balance was 1,000, so the difference between the two will be 200. This also means that our provision for doubtful debts increased with 200 from 1,000 Namibian dollars to 1,200 Namibian dollars. And since our provision for doubtful debts account increases on the credit side, we entered the 200 Namibian dollars on the credit side. Now after that, we will enter our single line and our double line, and then we will add up and we will get to 1,200, and that will be our closing balance for 2017. And our closing balance for June 2017 will be our opening balance for July 2017. Now for our second year, that's 2018, we need to take 4% of 22,000 this time, and 4% of 22,000 will be 880. So 880 should be our ending balance. So now how do we account for that? Let's move to our ledger. This is where we were. If we were to continue, we would say 1,200 less the 880 which we have calculated will give us a difference of 320. But now our provision for doubtful debts has decreased from 1,200 to 880. And if we were to decrease our provision for doubtful debts account, we would post to the debit side. And that's what we do. We post the 320 to the debit side. the details. The description will be profit and loss, and then we will balance our provision for doubtful debts account. 1,200 less 320 will give us 880. There is an increase in our provision for doubtful debts. We will enter that difference on the credit side, and if there's a reduction in our provision for doubtful debts, we will enter the difference on the debit side. Please take note that only the movement will be recorded in the provision for doubtful debts account, not the full amount. Now let's have a look at how we will record this in our income statement. Let's have a look at our income statement for the year ending 30th of June 2017. This is an extract of our income statement. We'll start with gross income, less expenses, and under our expenses, we will put in our increase in the provision for doubtful debts of $200. Then we have stationery, and if we add up our expenses, it will come to $600, giving us a net profit of $29,400. But I want you to pay attention to the increase in the provision for doubtful debts. If there's an increase, we will record it under the expenses. And also we recorded the difference, the movement from the beginning of the year till the end of the year, which is $200. If we have a look at our statement of financial position, under our current assets we will have debtors, and the debtors ending balance was $30,000, and we subtract the $1,200. We use the ending balance, the full amount, when we post to our balance sheet, giving us a total of $28,800 for our ending balance for our debtors. Let's have a look at our next year, which is 2018. This time we'll start with gross profit. We'll add the other income, and because there was a decrease in the provision for doubtful debts, it's classified under other income. Then we get our gross income, and then we'll subtract our expenses, and then we'll come to our net profit. But this time there's a decrease in the provision for doubtful debts, so it will be recorded as an income, not as an expense. So it's the movement that we record in our income statement, but the full amount we'll record in the statement of financial position. Let's have a look at our statement of financial position for 2018. Under current assets we have debtors. Our closing balance for debtors on 2018 was $22,000, and our closing balance for our provision for doubtful debts was $880, and that's the amount we use to subtract. So remember, in the income statement you record the movement, and in the statement of financial position you subtract the balance from the debtors account.